Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Woohoo! Party! It is, where are we here? It's Wednesday, July 17th. Now, holy geez, only about, a little less than 2 weeks until big TRI Meetup 2019 in Vancouver. So we're all getting super excited and jazzed for that. I see that school programs are marching along. Level oneers doing great work on MACD and now off to Willie to learn about overboughts and oversolds. Level twoers are working away on futures market structure right now, doing some great work with spreads and understanding what they can tell us about contango and backwardization. And level threeers are rocking the options markets. In fact, later on this afternoon, afternoon, evening, morning, wherever you are in the world, we will have our level 3 group tutorial session. So get your WDB option put right ideas all in order, level threeers, and of course also covered call strategies. So we should have a great session this morning. Super duper looking forward to that. With the evolution of these Google Hangouts, frankly speaking, we may have to ad lib a little bit heading into early August. If I understand correctly, Google is going to do some major changes to the way these Hangouts operate. So it'll be interesting to see how we sort of have to dodge and weave all the hurdles here. So be cognizant of that. That's still a few weeks away, but nonetheless, changes are coming. So just be prepared. But while we're still working in this particular format, we've got our regular crew in the house this morning, and I can't wait to hear Thomas's comments about gold and silver. Of course, I think he's right on cue there. He wants to see lots of move up here. So market's agreeing with him right now, but we'll wait for his commentary there. But I suppose we ought to start with some introductions. We've got the mayor of Vienna, of course, driving the bus this morning. How are you doing this morning, Mr. Mayor?
Hey, Brian, I'm pretty good. How about you?
Excellent. Good, good. Always great when I get to hear your voice. I suppose you're heading off to the quiet LA environment pretty soon, eh?
Yeah, I will be stepping on my Viennese Mayflower soon. So,
all right. So, we'll be. I just don't want to see the gold chains. Don't show me gold chains. As long as I don't see gold chains, I'm very happy. But anyway, I'm being silly here. So good morning, sir, and thank you very much for driving the bus, keeping us on cue here. And as a regular contributor, commentator, editor, charter trader in chief, I suppose, we have Thomas on the call this morning. How you doing this morning, Thomas?
I just saw gold pop up. I guess that's what you were talking about. Holy crap.
Yeah, gold's I mean, me personally, I have to be asking whether getting this rally ahead of this Fed meeting is maybe setting up the market for a buy the rumor, sell the news scenario. Tough to say. Seasonally, of course, this is a pretty good time of year to be thinking long gold, but long gold and silver, but only time will tell. But on balance, your bullish sentiment of late seems to have been spot on. So way to go there. I suppose probably the best thing for us to do is just jump right into what you have sort of in store for us this morning. So why don't you tell us what you feel like talking about today?
Wow. I'm just kind of taken aback by this because I put on a hedge. I have a physical position on gold, so I wanted to hedge it at 1400. But it's really interesting to see how this thing. I mean, I've been watching. I'm in Europe right now, so I'm watching this market as it opens up European time. And what I found most fascinating: Tuesday, Wednesday kill zones. This thing at 6 in the morning, New York time, really came down and tested a lot of these lows that we put in over the last couple of days, but rallied hard. This was almost like pushed into a liquidity zone on purpose. And right as it broke the bottom and probably ran a couple stops, this thing just jolted higher into New York Open. And frankly, I'm a little taken aback by it. I mean, I'm happy, right, that this is rallying. But as Brian said, his concerns about this going into Fed are really interesting. We kind of have to, I mean, from a fundamental perspective, should probably try to understand how a 25 basis point cut could potentially affect dollar liquidity and therefore affect gold based on the value of dollar. And that's a pretty complicated thing to try to understand, especially given that this market's been anticipating this cut for quite some time. So I think the idea is that, you know, you cut interest rates, and therefore you kind of see the dollar fall a bit, sort of as a knee-jerk reaction to that. And therefore, if the dollar falls, and I have that right, the opposite and inverse correlation to gold will force gold to go up even more. That's kind of how I'm seeing it, if that's not already priced into these markets, right? So what could essentially happen is, if this is fully priced in, you see gold sell off and the dollar rise into this event because it was priced in, and you see the Fed rhetoric come out less dovish than the market would like to see, sort of saying that, hey, this is one and done, and we're not cutting anymore, or they see some more strong economic data coming out that prevents them from really indicating to the market that things are weaker than they, you know, that they see the economy as weak, which, I mean, realistically, you've got stocks at all-time highs and jobs that are strong and all that yada yada stuff. But it's certainly becoming more and more fascinating. I mean, I really wanted to see gold come down below 1400 over the coming months here, maybe into the low 13s if you put this thing on a daily chart, to give me a nice buying window. But boy, I mean, this is quite the consolidation here. And we are overbought on the daily, so maybe this is a bit suspect nonetheless. So we're going to be watching. And the interesting thing is that my indicator is starting to flash warning signs here. So I'm a little hesitant to do anything other than just wait this out. You know, maybe my hedge was a little early, but nonetheless, I don't think that this is the right idea to be buying more. So I'm not going to be putting my toes in the water here any more than they've already been dipped. Therefore, I'm going to be waiting for this to break above, realistically, 1450 on gold for me to get really excited about this as a continued breakout, right? So, right, 50% levels sitting at 1483, but sure, there's a lot of upward momentum, or upward room for gold to continue to rally here on the weekly chart. And Alex was
You do
talking.
an AB equals CD off of those bottom. I think you've got the AB line already drawn on there.
Yeah,
If you could just clone that.
that's up here, right? So I
Well,
did.
no, way over in July 2016.
Oh, you want this
That
thing?
you see that you've drawn
Yeah.
the AB line already there. You could just clone
Yeah,
that,
I see that.
and then project that off of the next low, which was, looks like, you know, December, January 2017.
Whoops.
Yeah, right there.
Okay, right
So
there.
what
There's
I'm
confluence.
Yeah, what I'm worried about here is if you go back to your daily chart, we never did get that bearish divergence, that which usually sort of marks the top, right? We made a new high there. So I could very easily see, you know, like I said, if anything, if you were a gold bull, what you want to see is, you want to see the Fed announce they cut, and then gold takes off, because then you've got a nice window until the next Fed announcement. Everything's priced in. What I'm worried about here is that the gold market moves up to new highs here, paints that divergence in the MACD, and then we've got the permission to dump hard. So if anything, the way I'm sort of looking at this right now is, I do like the idea of hunting setups. I could understand people, if you like maybe zoom in on a 4-hour chart on that, hunting a bullish bot off of this and playing this from a bot perspective as a trade. But be very tenuous on that. And on my screen right now, this is my favorite metal stock right now, my North American palladium, their palladium, platinum, a lot of the rare earths. And you notice this bullish bot is working away off the 4 hours now. So I do like this as a trade, but I'm a little concerned that this is not, shouldn't, the breakout, and if this is trend continuation, this shouldn't be happening ahead of this Fed announcement. It should be happening after. So I'm a little worried that this might be sort of a buy the rumor and then sell the news on the other side of that event.
Yeah.
And also too, if I understand correctly, Mueller's testimony was put off 1 week. So we might be seeing, like I'm seeing treasuries bottom. Interestingly enough, we actually got a little bit of an algo signal here this morning on the U.S. Treasury market. You can see the W working off of my chart here. That was a V top, so we should expect that to be tested anyway. And then our beloved Bitcoin and crypto is catching a bid here this morning. So yen is moving up as well. So are we getting one of these sort of, all right, we're getting sort of almost like a flow back into the fear assets heading into this Fed announcement. Then once the Fed announcement's done, and the irony of it all is if these econs come out relatively okay, I think the market is pricing in a quarter point cut by the Fed. You never know. Maybe they don't cut. I don't know. But, if there's any disappointment or if there's any sort of word out of the Fed, we've done the quarter point insurance cut, no more cuts. We're back to watching the data, no more political pressure, any kind of talk like that. We could actually get a repricing event right back down to the bottom here following that Fed announcement. This is going to be an interesting event right around our TRI meetup. Interesting, what do you call that? Correlation of events?
Yeah, we're going to have a Fed party, right?
Yeah, sure. You're going to dress up like Janet Yellen, right? And I'll be Ben Bernanke. Oh, that'll be a picture.
Yeah, we can make out. It'll be fun.
Okay, I don't want to go there. But all right, so apologize for interrupting there. Please continue, sir.
Wait. What happens if Ben Bernanke with his helicopter money and Janet Yellen make a... All right, no, this is off topic.
Yeah, we're just digging a deeper hole here. Let's
really
move on.
Yeah, what kind of financial child is
something actually that jumped out at me that I wouldn't mind you chiming in on? Couple things here. Number one, first and foremost, your VIX index. I mean, if I was ever going to buy call options on the VIX, this is the time to get seriously interested in those call options. So quantitative lubing. Oh, that's terrible. Thank you, Mr. Mayor. But I don't know whether you can see my chart here. But VIX right now, nobody's talking about the VIX right now, eh? Nobody. And look how it's just politely sitting down here at the bottom end of the range. So I'd be interested to see whether you're at all interested in the VIX right now. As well, something that jumped out at me, I think actually this is a textbook Dow theory sell signal. Wow. This is in essence the everybody on, and I'll post this in the lounge. I think I posted it earlier this morning, but I'll do it again. I even tweeted it out. This is a classic scenario where the Dow Industrials, which is the teal line, has moved to new highs, but the transports have not. And remember, we said yesterday's up action on the transports was all about one company, that JBHT. Following that sort of good news from JBHT, the transports have promptly pooped the bed right back down again. So actually, this is an absolute textbook Dow theory sell signal. So it'd be interesting to see how this plays out. But I mean, you don't fight Mr. Dow. The market is speaking to us here. So I thought that was interesting. Also, too, sort of juxtaposed with this, we were talking about this earlier, the small cap stocks, they are not participating in this market at all. And you can see how relative small caps relative to large caps, they're continuing to forge to new lows, this spread. The reason why the stock market bottomed when it did back in January, I think, was all about, oh, darn, got rid of the wrong one. was all about the spread between sort of riskier, smaller stocks and the big conservative stocks actually tilted towards the small stocks. And that's basically your spring rally there in the stock market. So the small cap stocks are just dramatically underperforming here. They are not participating in this bull run. So not only do we have a Dow theory signal kicking in, which frankly speaking shocks me. Oh darn, did the wrong one here.
It's especially shocking because of yesterday's action, right? How strong the transports were, and now they're just completely shitting the bed today.
Yeah, well, like I said, JBHT gapped higher, eh? That was a pretty violent move. And it sort of dragged everybody with it and then said, okay, we're done with that guy. Now let's get back to regular business, and back down we go. But just sort of finish off this thought, if we look at sort of the internals of the broader market, and this is something that I tried to convey to the level oneers, listen to the broader market. But this is the amount of stocks making new highs versus the amount of stocks making new lows on the stock exchange. And again, if we listen to these internal indicators, back in late December, early January, we got an incredibly powerfully bullish signal here. So level oneers, right? This is what I really need for you guys to see when we talk about using breadth indicators to help us now. And it's interesting how the breadth did start to break down, but then quickly snap back. But this is starting to look really, really dangerous here. So we'll see how that goes. That's a little bit of an ominous sign there. And then finally, the breadth of the market, the amount of stocks moving up versus the amount of stocks moving down. And this is a conversation all about the Russell 2000, how it's not participating in this bull market. You can see the divergence here. I mean, yeah, this is where the stock market was extremely strong. And really, the broader market is not participating in this bull market. And everybody should perceive the potential for this big honking M. If this M fires here, my hunch is get ready for a meltdown. So, that's a couple of interesting internals. And then also, too, this is the middle of July. Usually stock markets, are frothy through the summer. All the pros are away on the Hamptons. So things like the VIX index suggesting that the market is extremely complacent. And, like from a fear perspective, we probably, as contrarians, we should be paying attention to that. The fact that the Russell 2000 and the small caps are not participating in the market, the fact that the transports and the Dow industrials have disconnected, Dow theory sell signal, and the fact that the internals of the market, new highs, new lows, breadth, are not really that happy. I got to tell you, everybody, there's a lot of warning signs that are being flashed here. So I just, for fun, wanted to take a look at the internals today. So sorry for taking so much time there, but there's a lot of sort of very subtle messages being sent by the market right now that I think we have to pay attention to.
Yeah, I agree. I'm glad we did that. I still can't believe how much that transports thing crapped out. And yeah, just to answer your question about the VIX, I'm certainly interested in this, right? I always love trading the VIX.
Just do a nice little trend line off of those recent peaks. I mean, you can, I get messages from LJ, Leanne. I know you're still out there and we talk every once in a while, but she's not that active on the site because she's got a family and she's in the UK. So this doesn't really work very well for her time of day. But, on an LJ setup there, I would be getting extremely bullish of the VIX. So you can see it. We're slowly creeping towards problems here.
Yeah, and there's a nice, is that a div? It looks like a potential div could come in there. That's awfully freaking close.
Yeah, it's not here yet, right? I don't see things here yet, but the anecdotal evidence is starting to build. And guess what, guys? Middle of August, Brian's going to start talking about buying put options on the stock market, getting ready for the fall. They don't call it the fall for nothing. So, just be forewarned, everybody. This is, an old saying I used to always say to my clients is, Brian's usually right, but Brian's also usually early. So, we're starting to get sort of signs that, okay, we're probably still a bit early, but we're starting to get the subtle tells that we're getting close to some sort of pivot here. All right. Any particular? I noticed you had Halliburton on your screen there, down 2.75% today. For whatever it's worth, everybody, full disclosure, I was long a little oil stock. A really good analogy here of gold stocks and oil stocks. Can everybody see how oil and gold can't move up or down together in unison? Oil's getting its ass kicked right now. I sure hope for James's sake that he bought a whole bunch of puts here. He also bought some calls, short-term calls, because the market popped up here. Algo went bull, hit its 2-to-1, and we started to melt down. You can see oil just forged to new lows. And just full disclosure for everybody, I did have a bit of this SRCI on the books. I bought this little reload zone within a reload zone. But as you can see, we broke the old lows. And on that event, I posted in the lounge, I tweeted, I just basically said, look, I was wrong. Half of this battle is just capital preservation. This was a trade, so I basically liquidated the position on the fail of 401 here. So basically the market's sitting right at the breakdown level. I could actually make an argument bearish AB equals CDs here. So not really a fan of oil right now. And it's just interesting you had Halliburton on your screen there. I don't know whether you're thinking about oil on the short side or whether you're, your thoughts, always appreciated. But a really interesting analogy here again, that oil can't really rally if gold's moving up in earnest and vice versa. And so we see oil's getting its ass kicked here.
Yeah, I mean, regarding Halliburton, I liked this idea as a long down around here when we were putting in W's and putting in bull divs. I think that this chart speaks volumes here, not because of the volume, but more so because of the lack of counter trend rally. This is really concerning for a name like this. The fact that we couldn't even get within $1.50 of or $1.30 of that 38.2, and let alone fill in the gap up here. I mean, this is just pure weakness. If we break below this $22 mark, you can see the potential bear div developing, if not close to confirming below the zero line, as I like it. We could be going to new lows if this thing craps the bed, and as Brian said, if gold continues to rally, it's going to eat oil's lunch. And what was the other one? Schlumberger, right? That was another one that I was interested in. I never actually took positions on either of these, even though they looked so good. Right, same thing here. This one enjoyed a bit more of a rally, but also showing weakness. No market structure tops yet, so maybe we're a little early to this trade, but we'll see. I mean, I'm not going to trade this per se just by the way it is, and frankly, I don't know what it is, but I hate trading oil, and I guess I can't even trade the names associated with it. So we'll see how that
That's funny.
It's really odd. I mean, everyone loves trading oil. I hate it. Whenever the oil segments come on the news.
Well, dude, you're in the fucking metals business. You should hate oil.
I guess it's built in.
It's like the polar opposite, like commodities. Energy is one end, metals are the other. You're a metals guy.
Yeah, I really am. And I never realized how much in that camp I was.
That's hilarious.
Yeah.
All right. So sorry to derail you there, but I think just simply put, this is an excellent anecdote of the relationship of oil to gold. Really, really good example. So, and then the weird thing is new people to trading, they don't understand that relationship. So. Interesting. I was looking at this gold-silver ratio as well. So it sure looks like this thing is broken, eh?
Yeah, that's the first time this year this thing finally dipped down. That's nice. That means silver's trying to come back. And I had a call this afternoon with a big metals firm, and they were talking about what they see in the market is that gold is essentially established a base. Because now that silver and platinum are rallying, they're seeing that those are starting to catch up because evidently the other players believe that this move in gold is real, and therefore they want to sort of capitalize on the other markets that have been left behind, be it gold and silver. And I guess we should bring up a silver chart here, but this has been one hell of a rally. And gold and silver's finally catching up. Here's the XAG. This is the spot price. You can see the market structure come in. And, you know, we're definitively going to test these highs here at $16, it looks like. But a break above those levels, that's big, right? This thing's going to rally probably a full dollar to the upside.
Wicks and tails like to be eaten.
Yeah, that's definitely.
You know, that wick up there, that looks disturbing. That to me looks like they want to take it right into that level, and that's where they want to get short. Be interesting to look. I'm just going to see if I can quickly pull up a silver chart and see whether Colleen would be interested up top here. Because I noticed that off of that full profile, we're above value there. So it'd be interesting to see if buyers are actually stepping up. The 4-hour chart, you know, if silver is such a great thing, why are there no buyers up here? That's a little bit bothersome. Keep in mind, everybody, please understand, this silver market, these guys are outright crooks. They are the most evil traders out there. You know, if anything, what I would suggest to everybody is don't try and outsmart these guys. These guys are pros at taking people's money. You know, if you're going to be playing the higher time frame structures, you know, work your stops against, you know, we got tons of lows there. If this W does want to come in, great, hunt reload zones, that kind of stuff. But don't try and outsmart these guys on the shorter time frame. You can see, look at the little FU move that they did back there on Thomas's chart back in, it looks like October, right? Did they take it just to new lows there? These guys, they are cheeky sons of bitches.
Yeah, this is the SLV. This is the ETF. Let me go back to the...
Yeah, well, it's got to follow along probably. Oh, look at that, eh?
Yeah.
So, you know, please, everybody, be careful trading silver.
Yeah, and
sorry, go ahead.
No, you're right. And they've been caught before, obviously with the Hunt brothers, but even more recently, they were fined and just pretty much, who was it? It was a JP Morgan trade desk. And they found one of the traders and fined him like, I don't know, $1 million or something stupid, small. And that was it. Don't do it again. The slap on the wrist.
And then it's like page 10 of the business news.
Yeah.
And then they're right back to what their old games. Just don't be so damn blatant.
Right. But I think, you know, it's funny. Remember like a couple months ago, I told you that Goldman Sachs was shutting down their gold and silver trading desks?
Bullshit. They just renamed it Poloniacs.
Potentially, yeah. But I mean, it was funny because we were talking about that on the show, and we're like, "Hey, this is like the perfect scenario for this thing to start rallying."
Yeah.
Just do whatever the opposite. Goldman's like, oh, we can't make money in this market anymore. We're shutting our desk down. And then like a month later, this thing takes off.
Sure. Yeah. You know, if anything, though, too, you know, if we look at seasonality, I think this is a really great lesson for everybody in metal seasonality, right? If we look at our gold and silver right down in the corner, and everybody should grab this and just throw it in their files. You see like gold, June, July, right? This is when seasonally this thing should bottom. And if we look at, you know, the silver market, June, July, August, this is when the market should bottom. So don't be surprised that the market's catching a bid here. I'm just really worried about people just going all in here. You know, as I sort of started my commentary off, I think that there are trades here. And, you know, I wanted to try and sneak in on this Great Panther that I talked about yesterday. It looks like they might be leaving me behind here, but I'm not going to chase this thing. There's no way I'll do that. And then, you know, PDL, this platinum palladium stock. I like bots here, but this is a trade, in my opinion. What I'm really worried about is they're rallying the market into this Fed event, and then what happens on the other side. Oh, sounds like Brian was just saved by the bell.
Oops, sorry. Let me answer this. I actually
Okay.
hang on.
Actually, so why don't we transition over to crypto? Thomas has got to take care of some business. I'll just talk about some levels here. And then, of course, he can add to the conversation when he comes back. I thought it was interesting to see. I was a little surprised, frankly, that you can see the algo actually went bear here. And this is just an insanely huge fractal. I don't doubt many people could actually take it. But I was a little bit surprised to see that actually it hit its 2-to-1 objective here. Nice little stop wash against these lows. And it looks to me like, whoever's running the bus on the CME contract, they've clearly decided that this is some sort of floor. It's a pivot level on the corn futures, no pun intended. You can see how powerful that breakout level is, and then they defended the breakout. So my hunch is there's a lot of really powerful people that have taken positions right through here. And you notice that the market coming into these levels, it did paint AB equals CD harmonics. You know that the futures boys, they see this as plain as day. I don't think it should surprise us one bit that, kind of like we had back in the winter time. Some big CME trader came out and said, $3,000, $4,000 Bitcoin, I'm covering my shorts. The trade's done. So those big traders, I'm sure they saw this and they said, you know what, time to start, let's not get greedy on this short. If I look at sort of the lower time frames, and this is what kind of jumped out at me because I have much respect for Mr. Bollinger. I think he's a really, really nice individual. And if anything, Alex, you're going to be in California. I think he's in Carmel or maybe Santa Barbara. You should maybe try and reach out to him and see if you could hook up to him. Maybe next time I come down to LA, we could maybe convince him to maybe come out to lunch with us or something. We'll buy him a nice lunch. Joshua can pull up in his Tesla or something like that. But anyway, I'm a big fan of Mr. Bollinger. Actually, I had somebody on the site even ask today if I could just review Mr. Bollinger's tool. This is his percentage B, or in essence, sort of the volatility of his volatility indicator. And last time it painted divergence along with a nice MACD double divergence. We had a nice rally ensue off of that. And then last time it painted a divergence with a MACD double divergence. We saw the sell-off. So gee whiz, here we are. We painted MACD divergence. I wouldn't mind seeing a nice little double div, but I come down and I look at Mr. Bollinger's indicator, and lo and behold, here comes a little nice little divergence in his indicator. So to all intents and purposes, and interesting too, really great commentary on how, LJs, I was speaking about that earlier, how really we have to let the trend line break and then hunt the W's on the other side of the trend line. And I even said in a video that I don't know whether it was the 10-minute overview video or whether it was in the daily brief, but often we see end up happening is we break out through trend lines and then we come down and we just play with the trend line from the other side. And I think that's exactly what's going on here. So we're back above this trend line. And the key here, of course, is now we got to start hunting structure again. So can we get a W on the other side of this trend line? The interesting, the price momentum and the volume momentum and the volatility momentum indicators are happier. I think probably the green light on that W, if it does come in, and really we just don't know now, is probably going to be on the resolution of this potential divergence, which also happens to correspond with this bigger wedge breakout here on MACD. I'm a little bit concerned here, though, because I even said this in like broiler chicken shows. Sometimes we get MACD break out of these coils and then come crashing back down on the other side of it. So, color me skeptical right now. But I am seeing some encouraging signs that we may be closer to the bottom than the top. And then the last thing I'll sort of mention is I'm watching the volume impetus really closely. Obviously, the bears are very awake, right? And if we do our count, one high, two highs, now we have to see a third high and then a calming down of the bears. I don't see the third high here yet, but I do see that the bulls are waking up. So that's encouraging. The battle is on now. Both the bulls and the bears are wide awake. It's just a question of who sort of takes control of this market. And of course, that is, gee whiz, what a coincidence. Holy crap, people learn this. When you get two harmonics side by side, same thing, kind of like what we talked about the futures markets there. A lot of people see these harmonics and are just like, okay, maybe at the very least, we'll just cover our shorts and take profits. There are people that will blindly buy these harmonics. It's a little bit dangerous. I encourage, 3 reasons for a trade, all that kind of stuff. We do have divergence. We have location. Now we need to see those W's. Okay, Mr. Thomas, Mr. Bear, you're still on your silver chart, but do you want to talk a little bit about what's going on in the Bitcoin market now, or do you still want to talk a bit more silver?
Well, I just got a call from a trading desk that I've
buy me as much silver as you can.
Yeah, they said a bunch of big lots came across their desk, and they just wanted. I have a friend there, so he's letting me know what was going on, which I probably shouldn't have said on the show. Whoops. Oh well. Anyway, so let's go.
You didn't name names, so that's the good thing, right?
Yeah, my friend at Goldman Sachs and JP Morgan.
Oh no, those are the last people we want to hear.
All right. What should we do? Let's do.
This guy, man, did you? I don't know whether everybody. I posted the link, retweeted it and stuff out. But holy crap, did this guy ever get worked over this morning in front of this Congress today? Eh?
Oh yeah, I mean, this guy just got grilled. He got grilled, and frankly, I'm shocked that he didn't have black char marks across his forehead after the amount of heat that he took from some of these people, including the ever famous Representative Waters, who opened up the other day with her guns blazing, and now she's calling for an indictment for Facebook's past mistakes. I mean, boy, are these people furious about their personal data being leaked out, because they know all the shit that they've been doing and all the data that Facebook gathered about them isn't going to look too good for them in the future. So
that's right. There's the bald guy. I can't remember what his name is, but he went to war on crypto back like a year or so ago, and crypto called him out. He is the most corrupt politician. I mean, it's just staggering, the corruption. And the irony, Sherman, thank you, Will. And the irony of all of this is that all of these sort of data gathering sources and stuff, they're actually going to hold these politicians accountable. And blockchain is probably a modern politician's worst nightmare.
Oh, for sure. And actually, I have some great articles that talk about that.
There was somebody, I did see an article earlier today. It was about that Epstein guy. But they were basically saying that, he basically bought off a whole bunch of people. That's why nobody has said anything about his pedophilia. But those days are gone now with social media. I mean, he can't control the politicians. It's fascinating. This is a very interesting time we're living in.
Well, I mean, not to go on a long rant, but I think it's fantastic that we're developing systems that can't be manipulated by human beings to further their agenda. I think data first and evidence first approach is definitely the best here. So I've got this article here about this economist and crypto analyst. I don't know this guy, Alex Kruger, but he basically went on a bit of a rant here trying to understand how Trump would potentially go about banning Bitcoin. And he says that, other than the obvious, which is going after the fiat on ramps, forbidding banks to service crypto exchanges, or requiring banks to not service exchanges unless they meet certain conditions, that would be really hard to shut down Bitcoin. And those were the types of measures that regulators in India tried to use last year to shut down all the current crypto exchanges and prohibiting banks from servicing them. So, is it feasible? Sure, in terms of like cutting off the fiat ways in and out of the market, but to shut down Bitcoin itself is obviously not going to be possible given the way that it's created, and that was obviously the point of it. But I think the reason why the U.S. government won't explicitly and specifically go after Bitcoin or other cryptocurrencies is because of this paragraph here, which is basically talking about they've woken up the lion here with Libra, right? Libra is going to become this basket exchange of currencies, and it's going to rival the US dollar. And that's the last thing the US wants, right? Especially the way we have the US has global dominance over sort of the entire financial network with SWIFT, and anything that challenges that and the US dollar superiority is clearly going to piss off everybody. I mean, this is the equivalent of poking the hornet's nest here. And that's why everyone in the US has a hard on for this Libra situation.
Totally. And actually, I heard one guy say it really well. He said, one of these politicians, he said, Facebook basically censors its audience. So if you're in a legal business that just doesn't happen to agree with Zuck can basically censor you. And I think that's actually where they're going to run into the biggest problems is that, and then of course, I also heard too, and I thought this was fascinating, Facebook is mining all this personal data and reselling it and all that kind of stuff. And it's one thing to have sort of people's social media habits, who they're sort of interacting with. It's another thing to actually have all their financial data and where they're spending money and how they're spending money and all that, which I heard from the US government is just going too far. I got the impression from this hearing today that this thing is at least a year or two at the closest to coming to market. So sorry for the interruption, but I totally agree with you. I think that this Zuck Buck stuff is going to get shelved. I would be surprised if this hits the market anytime in the next couple of years.
Yeah, I mean, Congress is anyone in the U.S. is going to fry this thing. It's not going to happen anytime soon, for sure. I mean, they're so pissed off at Facebook that it's not even an issue in my mind. But what is the big issue to me is the next company that develops their own digital currency and how that shapes all of this. Everyone's looking at how Facebook and their Libra thing is taking heat here, and they're wondering how they can better design it, and more importantly, how they can cooperate with whether it's the government, the U.S. government, the U.S. Treasury, the Federal Reserve, whoever it is, any company in Silicon Valley that can partner with one of these government sectors, they pretty much have carte blanche going forward, and that's probably what we all have to worry about. As far as when they get that go-ahead, how does that impact crypto? Well, they say, okay, now that this digital currency has been approved, or hell, even the Treasury or the Fed could start their own digital currency. They're like, you're done with crypto. You can't use it. You can't come out of it in the U.S. and it's finished. So that's pretty much how I could see that unfolding down the line. But anyway, the point here is I've got another article about from Senator or Representative Patrick McHenry out of North Carolina. Basically came out and said, hey, listen, you can't really kill Bitcoin. Even the Chinese and their firewall and their extreme intervention on their society couldn't kill Bitcoin. So distributed ledger, full and open, and the essence of Bitcoin as a first mover, my point, blah, blah, blah. I can't kill Bitcoin. And others are trying to mimic it, like Libra. So it's interesting that a representative is coming out and saying that. I mean, it's obvious, right, at this point. Next article, I'm just going to breeze by here since we've taken a bit of time. Coinbase is delaying their deposits for UK users, which is now going to take 10 days. And the deposit has to be a minimum of 1,000 British pounds. So that's pretty interesting. I don't know why they started doing that. They temporarily suspended faster payments but added support for British pound SWIFT payments. And I don't know what this plan is here, or why. Maybe there's some kind of issue going on in the background for their payment processor. But that's kind of weird news to see, especially since it was such big news that Coinbase had come to England and given them the ability to link their bank accounts to Coinbase. So we're gonna have to keep our eyes on that as to what really forced them to do that. So that's weird. They did not disclose the motivation for the sudden change. Weird. All right, next thing here. China ranked, so Ethereum searches in China have spiked, and they're now number 3 for Ethereum searches. So we kind of saw back at the beginning of the Bitcoin rally, the Google search results for buy Bitcoin started to peak and kind of blast off on that Google Trends data. So
what was that? What was the searches? Holy fuck! What's happening to Ethereum?
Yeah. China ban Ethereum? Yeah, that's a good question. What did they specifically search for? Maybe it was just Ethereum or buy Ethereum, but I mean, it's interesting, right? I don't know if Ethereum's come out or specifically been banned and sort of condemned by the Chinese here. So maybe they're, what's that?
Has it?
I don't think it has. But I could be wrong about that. But interesting, Ethereum did come into an interesting location.
Yeah, I didn't get to mention that in my rant earlier, but I see a lot of anecdotal evidence. In fact, we might even get actually a really good volume impetus signal here that the bears are falling asleep right off a mountain man level here. So, ironically enough, for the traders, I actually think Ethereum looks really interesting for a trade setup here, and the incredibly negative sentiment. So, yeah, I agree with you. Something is very interesting going on here with Ethereum right now.
Yeah, and Ethereum's kind of had a bigger percent sell-off than Bitcoin has, right? We were at 300. Yeah, and that and Litecoin too. Litecoin's really taking it on the chin.
I don't think the market liked to hear that Ethereum was talking with Mr. Satoshi Vision. Who knows how that soap opera is going to play out. But from a gee whiz, that's a big, nasty bear div in Ethereum on your chart there anyway.
Yeah.
So, take it with a grain of salt. But traders, we hunt volatility. And wow, that sure is a huge range. I mean, basically the asset has fallen about, what is that, about 60% or so from its highs, 70%? That's a huge drop, right? So, just volatility wise from like $200 here. I mean, maybe 200 isn't such a great level, but I could easily see a $100 rally here. That's like a 50% gain,
Yeah, that's what that article was yapping about. Ethereum's come off 64% from its highs at 370.
64? Oh wow, so that was a pretty good guess on my part.
Yeah, you're good, as the British would say, you're good at maths.
Okay, cool.
Yeah, so 50% level is 286. So yeah, sure, to Mountain Man that makes sense. That's almost $100. Retest necklines. I like this too. Willie's a little oversold, and this div looks like
that daily chart looks horrible, but on my chart here, I'm actually getting like double divergences confirming here.
Oh, that's
and maybe tomorrow we can even have Julian review his RSI model, but everybody should, when you look at RSI here, you should see this very well-defined W in RSI, and whenever RSI W's, that's a pretty powerful signal. So yeah, I mean, it looks really interesting from a trade perspective.
Yeah, so I guess I'm going to play around with an idea. So let's have a little trading with Thomas segment for the next few minutes. How would I get in on this if I wanted to go long this thing? All right, so we're kind of moving into a short-term reload zone to come back down into a level that I'd be interested in buying. So let's pretend for a second that I want to buy this thing and get long the move that's about to come into the market, or hopefully come into the market. We're getting some evidence here of some market structure coming in, but lacking the bullish divergences. Well, how about that? This has actually come in. Is this confirmed now? this is confirmed. So this is a bull dip. So I do have a setup here. And funny enough, we've got these moving averages looking interesting to cross. So where would I be looking to buy? I would do probably a 2 or a 3 tiered level. I'd set my first bid at about 202, which corresponds nicely to this moving average cross, the 13 and the 30, coming down into that level, and then scatter my bids between 192, hoping to actually even lower than 192. My first bid would be at Mountain Man, probably 195 to 198. And then my third bid would be down around 185 to 187 to try to catch any kind of quick move down. And I think it would be a pretty sharp rebound back to the upside. But I definitely want to start accumulating a bit. I'm probably going to do this at a 10x leverage, so my stops can be pretty liberal. Moreover, my stop for the whole position would, and let me just average this out. Call it like 192 and change on an average position. Let me put the long on here. So 190, call it 193. My stop would actually be below these lows. So I'd be looking at like 183, maybe 182.7 and change. And my target, let's move this to a 4 hour, right? We kind of want to get that daily target and try to get in on this the best that we possibly can. So targets could be really obscene here, probably like 10 to 1s at this point. So I mean, this is quite a juicy trade to try to get in on, right? If Mountain Man is at 310, let's just go for more conservative value of this 200 period moving average at, call it 295, assume big fat round number. They won't want to take it so that everyone can sort of capitalize on that same mentality. So we're getting in at almost 9.5. I mean, this is crazy, right? But this is how I want to trade. This is how I want to be.
50% roll. 50% roll.
Well, that's where I have it set, right?
I'm just being silly.
Yeah, so I like this trade. I really like how it's developing across these time frames. This is really super juicy. Now, I know we only have 6 minutes left, but I got to cover what just happened to me. I actually bought this thing the other day, and the way that I did it is I've been taking advantage of the 0% APR offer on my credit card, where any purchase I make.
Oh shit! Oh no!
Well, it's great. It's 0% APR for 18 months on purchases. So I was like, all right, fuck it, free money.
Well, I don't want to encourage anybody at TRI to be buying this shit on your credit cards.
So hear me out. So here's why anyone who's considering doing this, that it's a fucking terrible idea. So if I go back to the hourly, I bought this thing on Sunday night at 8:47 Eastern time equivalent. So Sunday was what, like right here? What was Sunday? So 16, 15, 14. So the 14th was this dip at 8:40. So this thing dipped down. I didn't quite get the lows here, which happened yesterday, but nonetheless, I went through Simplex, right? So Simplex is that credit card processor that will give you crypto in exchange for using your credit card. They charge a almost 10% fee on that. So I was getting pretty, wiped out on fees, right? I'm losing a $500 charge. I'm getting like $460 back, which sucks, but it's an interesting idea to try to explore. I only charged $500 to the card. But what happened was I charged this thing at 8:47 Eastern. They ended up giving me my fill at $240 when the market had already dipped down 5 minutes, a full hour and a half prior to that. So they gave me my fill at $240 when the market was sitting down around $200. Here it is. So we are 14th of July. I'm going to scroll at that 8 o'clock area. So 14, or was it the 15, 14, 8 o'clock. So here we are. Here's that dip. Here's 8:40 right on this candle here. You can see price is at 209. So I got filled at 240. The market had already gone down almost a full 2 hours prior to me buying this asset, prior to me buying Ethereum on this thing. And they filled me at the price up here when in fact price had already dipped down to 200 and didn't even rally back up into that 240 level ever, right? Like this thing continued to move down. So I've been emailing with them back and forth, getting super pissed. I was supposed to get 2.17 Ethereum equivalent for that $500, and I only got 1.899. And I've been emailing with them back and forth, and they're just like, oh, due to business constraints, the real exchange rate that we use is different from the actual market. And I mean, I'm furious. And let this be a lesson for anyone who's considering buying this on credit cards. Like, you will get hosed on volatility like this. I mean, it's almost borderline illegal what they're doing. And if they don't actually end up giving me the difference, I'm going to submit all this to whoever I have to, because what they're doing is just predatory and taking advantage of American, poor American people who are, using their credit card, which, first of all, they should never be doing that in the first place. And second of all, getting the freaking terrible fees. And third of all, being taken advantage of for an extra $20 or $30 per coin for hours on end on this exchange. So it's just really a nightmare for this whole thing. And frankly, it shouldn't be this way.
We should, if there's anybody doing the write-up of this daily brief today, I think we should, whoever does the write-up, I think Marat or Alex, maybe just put a little note in the write-up. Can you please just make reference Thomas's warning about using credit cards to purchase crypto? Because I think that little couple-minute segment there was a really good lesson for everybody.
Yeah, and I'm almost glad it happened to me and not someone who can't afford, if you put that money on your credit card and you end up throwing yourself in debt, and then the interest rate starts eating away at you, and you're already almost a fifth of the way, you've lost a fifth of your position just from buying the damn thing. And if it continues to crash, you're just eroded away. It's really sad. But I mean, if anyone is listening to this and of a way or of reaching out to them directly, because their customer support is terrible, or if a regulator, I'm happy to start a story, because I don't think anyone should be fallen victim to something like this. So I'm happy to do whatever's necessary to prevent this from happening to someone else.
Okay, well, that's a sobering anecdote. Thank you very much, sir, for the contribution. Stern warning to everybody in the community. That is the top of the hour, so thank you very much for your input today, sir. I think my closing thought, I think this is the world that we live in. Frankly, when I saw this, I was shocked. We all know, of course, the Facebook grilling. But what I noticed in the background, which kind of caught my attention, was, does everybody see this up here? I thought that was fascinating. The U.S. government now is basically a shill for these banks. And the banks now actually are advertising within the U.S. government. So this should be a pretty stern warning about who's really controlling the government. That's a little bit disturbing when I saw that.
Oh, wow.
I don't really like this idea of the Facebook coin. And frankly speaking, the more shit that these guys come under, the better and the more powerful Bitcoin itself becomes. And I think that Bitcoin is the liberator. This kind of stuff, this is all about this, right? This sort of corporations trying to take over this stuff. But I thought that was just a really interesting anecdote that even within the U.S. government, now the banks basically have embedded themselves, and they even advertise right in front of these public. Theoretically, the government's supposed to be impartial. So just an interesting anecdote of the world that we live in. All right, everybody. Mr. Mayor, what do you think? Did we do a half decent job here today?
Yes, sir.
All right. Have yourselves a great day, everybody. Alex and I will go do the daily brief summary here shortly. Try, of course, to remember what your number one job is to do. Get out there and hunt some setups. Like I said earlier, I think there's some really interesting setups developing for trades for those people that are trading on the site. It's I had asked Joshua just to put out his little matrix of crypto. I thought it was fascinating that yesterday, I think where was it? I guess here, BCH actually, of course, our comments about BCH, that's another topic altogether. But you see there are some uppies here. So get out there and have some fun in the market. Trade your setups. Try and play from a position of strength, and then, of course, know what your absolute number one job is to do each and every day. And for heaven's sakes, please, everybody, let's not get into the habit of buying crypto with credit cards. Okay, have yourselves a great day. All the best, and bye for now.